Hi everybody. I'm not Dr. Nick. Week of March 16th, 2026. The global equity landscape enters the week of March 16th under intense pressure following a volatile period dominated by geopolitical escalation in the Middle East and deteriorating U.S. labor data. The S&P 500 carries a 3-week losing streak, its longest in a year, as crude oil prices breached $100 per barrel following disruptions in the Strait of Hormuz. Investors are navigating a perfect storm of stagflationary fears, where surging energy costs threaten to reignite inflation just as economic growth, evidenced by a disappointing February jobs report, shows signs of stalling. U.S. sector performance. Key drivers. Last week, information tech. Soaring energy costs and rising yields pressured high-growth valuation multiples. Healthcare. Defensive rotation and robust earnings in biotech provided relative safety. Financials. Private credit liquidity stress and markdown loan values hurt banks. Cons. Discretionary. Higher fuel prices and weak jobs data dampened retail outlook. Calm. Services. Meta and Alphabet faced selling pressure amid broader tech de-risking. Industrials. Geopolitical uncertainty and logistics disruptions hindered manufacturing and transport stocks. Energy. Brent crude surpassing $100 drove massive gains for oil producers. Utilities. Investors favored stable dividends as a hedge against market volatility. Real estate. Rising long-term bond yields increased borrowing costs for property trusts. Materials. Supply shocks in fertilizers and metals drove up commodity pricing. Cons. Staples. Demand for non-discretionary goods kept the sector in the green. Key movers and risk factor. Expected up. Exchange. United States. 1. Nvidia. AI leadership solidified during GTC conference headlines and product launches. Risk factor. High valuation makes it sensitive to yield spikes. 2. Chevron. CVX. Rising Brent crude prices above $100 boost domestic energy margins. Risk factor. Potential government windfall taxes on high energy profits. United Kingdom. 3. Shell. SHEL. Direct beneficiary of Middle East supply disruptions and record oil. Risk factor. Global demand destruction if prices stay above $120. 4. HSBC. Benefit from rising global yields and potential BOE hawkish hold. Risk factor. Exposure to weakening commercial real estate in Asia. Europe. 5. ASML. Dutch semiconductor giant thrives as U.S.-China chip war accelerates demand. Risk factor. Export restrictions could limit key revenue from China. 6. TotalEnergies. TTE. Integrated energy model gains from European gas and oil volatility. Risk factor. Stricter EU environmental regulations impacting long-term growth. Japan. 7. Toyota Motor. TM. Weak yen near 160 level significantly inflates overseas earnings reports. Risk factor. Bank of Japan sudden intervention to strengthen yen. 8. Mitsubishi UFJ. MUFG. Japan's largest bank gains from rising JGB 10Y bond yields. Risk factor. Broad market sell-off if BOJ pivots too fast. Hit the subscribe button to stay informed. Which of these 8 stocks is in your portfolio? Leave a comment. Conditions and trends. Markets remain bifurcated. U.S. equities struggle with tech valuations and labor weakness. Conversely, the UK and European markets show resilience through energy and luxury exposure. Japan maintains momentum as corporate governance reforms and stable inflation attract foreign capital, despite looming uncertainty regarding the Bank of Japan's next rate move. Here at the Stock Market Performance Playlist is this week's stock terminology learner. What is the dot plot volatility? The dot plot visually maps Federal Reserve officials' projections for future interest rates. Each dot represents one member's estimate of where rates should be. Volatility in the plot refers to a wide scatter of dots, signaling high uncertainty or disagreement among policymakers about the economic outlook. Leave in the comments what term you want defined in the next video. Anticipated news. Week of March 16th. The FOMC interest rate decision headlines a week. A hold is expected, but the dot plot will dictate volatility. Simultaneously, the BOE, ECB, and BOJ meet, marking a rare synchronized central bank window. Nvidia's GTC conference will test AI sentiment, while US PPI and China's industrial production data provide critical inflation and growth signals. Help us to bring you the best content possible. Subscribe, like, share, comment. We're polling right now. What price do you think oil will hit by the 28th March? Go to our community tab to cast your vote. 2 broker offers. Sign up for rewards. See links in description. Bye, everybody.
This is the stock market performance playlist, the sound of victory. Peace.